Good morning, everyone. Today is Saturday, August 31st, and today we will cover the trades for YieldMax funds, TSLY, CONY, NVDY, and MSTY. So only two had trades yesterday because, as the others everyone pretty much closed up shop for the week, right? They closed up their weekly calls from the previous days, including NVDY. MSTY was the only one that did not. So, but NVDY had trades yesterday, mainly because obviously they had new contracts to play around with, which means people bought into the fund. So when new people buy into the fund, they are able to add additional contracts, not only to the synthetic position, but obviously to the weekly calls. So that's what these three transactions are. So we'll start with NVIDIA, obviously, here. What do we got? We got a buy call. We have a sell put and a sell call. So the top two represents what they add to the synthetic position. Prices are on the right. That's how much they pay per share. And then on the very bottom, this is where really they make their money. They sold a weekly call. 1,000 contracts, expires next week. September 6th, short week. You see the 124, that's the strike price, and 113, that's the credit that they got. But it doesn't matter until we plug it into the spreadsheet so we can see if any of it, makes sense. If it was good stuff there. Let's see. So they have a synthetic 116. That's where they added the 1,000 contracts. And it cost them money because the price now of NVIDIA is above the strike price of the synthetic, right? Because what are they doing on this synthetic? They're buying a call, right? And they're selling a put. So both of which, bullish, right? You buy a call, you make money when the stock goes up. You sell a put, you're thinking the stock will go up. Obviously, when you sell a put, you get a credit. So in order to sell the put at the strike price that they chose, at the strike price that the synthetic is of 116, they got a credit of $430,000 total, for the risk involved. Because, so when you sell a put, you're saying, I'll buy these shares at $116 if the stock price goes below 116 by the expiration date of 9/20. So that's the risk. For the buy call, you're saying, I want the right but not the obligation to own the shares, for this strike price by this date. So since NVIDIA stock is already priced above that strike price, it's already worth, pretty good money. And that's why you have to pay good money for that. So that's why you have to pay more money than the credit you got on the put. So you paid $695,000 for the call, and you got a credit of $430,000 on the put. So obviously, typically when they have one synthetic position, they'll do what they can to continue to add to it. But on occasion, if they're so far behind or so far ahead, they may start a new synthetic position because it may cost them too much money to add to the synthetic, or it may, they may be just too far behind in order to add to the synthetic. Either way, I don't want to get too far into the synthetic, but hopefully that makes sense. If not, we'll try again next time. But either way, 21 days till expiration, so they got time. They're already ahead of this. So at least as of today, they can make money. All right, so so obviously if my voice is a little groggy, as many of you know, snip yesterday. So when I had anesthesia, got knocked out. So my voice has been a little funky since then, as is my brain, of course. So, but either way, let's get through this. NVIDIA stock yesterday went up 1.51%. NVIDIA went up 1.48%. So that's pretty damn good. All right, so what do they got left? So they closed out their positions from the previous day. So let's look at the new position. We'll zoom out. We'll get the annualized yield in there. All right. It's never that easy, is it? There we go. All right, so yesterday's move, we'll cover that first. 1,000 contracts. They went with a 124 strike price. That's 3.88% out of the money. So, when you sell a call with a 124 strike, that's a kind of a bearish play. So you get a credit for that. However, you're kind of hoping NVIDIA does not go above that price by the expiration date of 9/6. So that yielded them 49% on an annualized basis. Their 30-day IV is 45%. So that is in line with kind of what they're shooting for. However, where do we stand with the others? Well, we have the largest position, about 64,000 contracts or 63,000 contracts with a 126 strike, 5.55% out of the money. And then they have 20,000 contracts, 127 strike, 6.39% out of the money. The good news is this is not over 5 trading days, it's over 4 trading days. So seeing these numbers over 4 trading days, again, it's okay, it's not bad. NVIDIA could jump up drastically, it could go down, you just don't know. Their IV has dropped a lot since earnings, which kind of sucks because, the premium's going to suck, unfortunately, until, I don't know, some news happens or something. It's becoming more and more of a less volatile stock, it seems to me. So I don't know. That's just maybe post earnings. Maybe it'll settle slightly above. We'll have to look at the historical on that later. Outstanding shares did go up by 250,000, so that's good. Here's the recap. 30-day IV, 45%. Outstanding shares, 39,775,000. Total net income, unfortunately, they're still at a loss of 30.4 mil for the weeklies. NVDY fund manager, yeah, he's just he's tired. He had that 2-week expiration. He got beat up left and right. He celebrated the night before. He went out clubbing. He has a hangover. You know how he feels. It's been a rough go for him, but in the end, he made money. So that's all that matters. Synthetic income, 10.8 mil. We know the short call loss, 30 mil. So they got no income to show for it. So my estimator really doesn't work. I did add the ticker to the top of it. I know some people are interested in that. So hopefully that helps. But my estimate is not relevant. So I'll have to use the IV estimate, which comes to a 45% yield. Let me zoom out because I know some people like to take screen prints to show people, which is fine. Obviously, the IV is being 45%. We're looking at 96 cents. 96 cents compared to last month's $1.25. Kind of sucks, but again, who knows? I'm putting out the official estimates either today or tomorrow as time allows. All right, so as far as the holdings are concerned, I did add at the top NVIDY holdings, so hopefully that helps out as well. We have a, the synthetic put is in pink, the synthetic call is in orange, and then in blue, we got the weekly calls, but too early to even talk about that. Synthetic bailout money is irrelevant, but I made it in red in case we need to talk about it next time. And let me just quote this properly. The 1 billion is total net assets. I know I always say net asset value, but that term really should be left for the NAV, which is 2533. Obviously, net asset value is NAV, so I should state total net assets is 1,000,007. So let me just get that out of the way. So obviously we're, did I say 1,000,007? 1,000,007,000, sorry. We're back in the bill area, which is good. But obviously in the trade price is 25.40. Sorry, I'm all over the place with this NVIDY, but yeah, you know how that goes. Anyway, so here's MSTY. What the hell happened here? A lot. So top 3, kind of business as usual. Buy, call, sell, put, sell, call. 800 additional contracts added, to the synthetic and then used to sell weekly calls. They were their last remaining fund to close out their positions for the week. And obviously those 3 right in a row, BC, BC, BC. BC represents buy to close. So as you know, they cash settle these transactions. They do not let them expire. So they paid 3 cents, 3 cents, 2 cents per share to close out you know, those transactions in order to use those funds right away, and they sold a call into next week. So they went from 3 different strikes and they decided to use one for the following week. But looking at how much they BC'd, the execution price, obviously they won. So MSTY, good job. Let's take a look at the spreadsheet though. Okay, all right, so we got a synthetic 139. As we just mentioned, they added to that 800 contracts. If you see here, the buy call is cheaper than the sell put, right? So the sell put credit gave us 1.5 mil. The call only cost us 960,000. So we made 600,000 to adding to this position. So I pretty much, you could pretty much guess what the price of MSTR will be. It'll be below the strike of the synthetic. So right now, no reason to worry because this synthetic expires in 49 days. And again, the whole point of the synthetic is, it's really just to replace owning the fund. Like instead of owning the fund, they make a synthetic position which follows and mimics the movement of the underlying. Why do they do the synthetic? Well, there's several reasons, but in a high interest rate environment, they like to use the actual money to invest in treasuries to earn interest, 5%, 4%, 6%, whatever it is, on top of whatever they're making on the, in the premium on the calls. So that's the reason, they decide to use the synthetic position or one of. All right, let's go to the August tab. All right, MSTR yesterday went down 0.11%. MSTY went down 0.56%. Of course, because I bought into it, right? All right, so let's zoom out a little so we could see how they did. Well, they did pretty damn good. If you look, rows 21, 22, if I click here, right here and here, they were essentially in the money, right? We were like cursing them up and down. Like, what are you doing? Like, you're killing us here. In the end, that ended up being 13% out of the money. Like, are you kidding me? Like that, I don't know. Luck. Do we call it luck or what do we call it? We just call it a win. That's just all we'll call it. So, because look how much they made. In the end, from last week, they made almost $14 million. So, wow. I mean, it's been a kind of a rough month, but that's really nice to see. Now, all of those, contracts from at least that they closed yesterday, the 31,735, as mentioned, they chose one strike. That one strike is 137. Now, that's only 3.46% out of the money. I know it's only 4 trading days, but still, that's a little low. The annualized yield on that is 92%. Their 30-day IV is 72%. So, kind of aggressive in my opinion. The 800 contracts that they added, because they, had new shareholders, people buying in, they used that money and they chose a 138 strike, a little higher, 4.21% out of the money. That yielded 84%. So even that one was aggressive, right? Because, again, they typically try to yield us whatever the implied volatility is for the underlying. Whether it's the 30-day IV, the ASAT IV, or whatever the hell, it's regardless. I use the 30-day IV, well, mainly because I have a calculation that does it for me. If I click this, it's a formula I stole from, an old dividend spreadsheet that someone gave me, or option spreadsheet that someone had given me many years ago. And it still works. But if there's a 7-day IV formula, if anyone has it, send it over. I'll add both to this spreadsheet. But either way, yeah, a little aggressive going into next week, but we'll see. Outstanding shares for yesterday, they did go up by 375,000, so that's pretty good. So the recap is, we talked about 30-day IV, but it sits at 72.86%. Outstanding shares, 19.9 mil. Total net income, 15.4 mil. That's a distribution of 78 cents, a daily income of 3 cents, a daily yield of 0.13%, and an annualized yield of 48%. So their annualized yield, not quite where it should be. However, it's a pretty good comeback for the month. The MSTY fund manager felt like they just ran a freaking marathon and they won. So let's give them their congrats. So congrats, MSTY fund manager. You did win the weeklies. Their synthetic income is a loss though of 45 mil. So we'll focus on just the weekly call income, which is what we should do. And that comes to 15.4 mil. So when you go to the total income per share, obviously that includes synthetic income. So we'll ignore that. And then we'll focus on the short call income per share of 78 cents. Throw that into my estimator, and that comes to an estimate of 93 cents, which is a 48% yield. However, that's probably going to be wrong. What does the IV estimate show? It shows $1.41 based on a 73% IV. So both of which is a decrease from the last month. Last month paid $1.94. So kind of a letdown. I'd be okay with $1.41. I was hoping to get like maybe $1.70. Would have been nice. I don't know. I still have to make an estimate, and I'll get that number out today. As far as the outstanding holdings, again, they got the synthetic, they got the weeklies. So they got, what do they got? They got three strikes. No, they got 4 strikes when all's said and done, right? Yeah, heading into next week, they got 4 strike prices. Obviously, they're a little heavy-sided on the 137 strike, but either way, don't have to look at the synthetic bailout. So total net assets, yes, I said it right, 463 mil. The NAV is 23.19, and the trade price is 23.20. All right, so that's MSTY. So only MSTY and NVDY had trades. So let's just go to CONY. So CONY has 2 synthetic positions. They have a 200 with 5,000 contracts left. This is they're 8% underwater on that. 21 days to go. So hopefully coin goes up. And then they have this synthetic. It's a 195, 5.97% underwater. 49 days to go. So no reason to really even harp on that either. So let's go right to the August tab and see how coin did yesterday. Coin went down 2.61%. CONY went down 2.14%. That should help the weekly calls heading into next week. So if we look at the numbers, again, they already had positions for next week. Where do they stand? Well, the lowest strike price is 205. They have over 16,000 contracts there. That now sits 11.8% out of the money. And then they have 17,100 contracts, 207.50 strike price, 13.17% out of the money. So with 4 trading days, that's a good spot to be in. So if you bought CONY today or Friday at that price, or if you buy at the open Monday, if it opens flat, you have potential upside of 11 to 13%. Could you imagine? That would be pretty nice. Because Bitcoin's been down, crypto's been down, so maybe it'll turn around pretty soon. Outstanding shares, nothing. But 30-day IV, 63%. Outstanding shares, 41.2 mil. They have income. They have 32 mil of it. Oh, and there's the cricket being super loud. 32 mil in weekly call income. Distribution of 78 cents. Daily income, 3 cents a day. Daily yield, 0.21%. Their annualized yield on the weekly calls, 75%. Their IV, 63%. So good job. I should have a formula. If that, greater than that, good job or something, right? If not, you suck. All right, so yeah, CONY fund manager here, just bulking up. He's getting ready. He's pumped, right? He's winning, right? We were tearing him up, but he's probably doing almost the best of the bunch here, right? He's doing pretty damn good, but He still got synthetic losses for the month of August, but let's focus on the weekly call income because, again, that's what it's all about. $32 million. That comes to 78 cents per share. Run that in the estimator based on how many days are left. That comes to 93 cents, okay? However, if we base it purely on the IV, it's actually less because their IV is 63%. So that would be closer to 80 cents. So what do I think they will pay? I will definitely consider closer to the 93 cent range. However, I still have to look at a few other factors until I make my estimate. Again, hopefully I can get that out today. If not, definitely by Sunday. I don't want to make any promises today because, you know how that goes. All right, so here are the CONY holdings. Again, I added the ticker to the top. Hopefully that helps. So we got the put in pink, and then the call in orange. That's the synthetic, and then the weeklies in blue. Already very cheap to close, which, is very good to see. But, we still want it to recover, so we have room to grow. Total net assets, 623 mil. The NAV is 1512, trade price 1512. So that's CONY. Last but not least, MSTY. I guess the cricket left. Started to mess me up for a second there. So TSLY has two synthetics. They have a 210 and a 215, both of which, only the 210 is profitable right now. The 215 is under by 0.41%, but they both expire in 49 days, so who gives a damn, right? So let's go right here and see how Tesla did yesterday. Yeah, Tesla had a really good day. Tesla went up 3.8%, and TSLY captured 2.84% of that. That's not bad. However, since they had a really good day, guess what happens to the weekly calls? Wah, wah, wah. Yeah, yep. Unfortunately, we only have 4 trading days. Okay, that's our saving grace. But look at the lowest strike price and the largest position, 30,648 contracts, 215 strike price, 0.42% out of the money. That's horrible. 2,215 contracts, 217.50. Strike price, 1.58% out of the money. So yeah, with 4 trading days, unfortunately, in order to win the weekly calls for next week, we need Tesla to really just not move. All right, so if we look at the outstanding shares, what do we got? We got nothing. All right, that's easy enough. So here's the recap. 30-day IV, 45%. Outstanding shares, 51.2 mil. Total net income, 1.2 mil. That's a distribution of 2 cents. Daily income, not even a penny. Daily yield, 0.01%. Annualize that, that's 2.55%. Obviously not, didn't want to mean to do that. Not what they're looking for. TSLY fund manager kind of scared for next week. I'm not sure if he's even going to go in next week. He may just call out sick. All right, payment information. What do we got? Well, we got synthetic loss of 184 mil. It's been a rough month. Let's just be real here. By the way, we're approaching the end of the fiscal year. We have 2 more months. Everyone keeps asking me, can you do a video of how successful, like how many trades were successful versus not? And I hear you. Believe me, I hear you guys loud and clear. And I will work on that. I don't know when, but I will work on that at some point. I don't know if I'll wait till October closes or if you guys want it sooner than that. But to me, it probably makes sense to wait till the fiscal year is over and then just show you like their stats, right? So it's not going to be easy, just so you know. If it was, I would have just had it done already. But because the way I set up my spreadsheets, which makes me think now I'm going to change how I set up next year's, it makes it kind of a pain in the ass because I have overlap from tab to tab. I know you guys don't give a damn about that, but that's what I'm saying. It's not that easy, but I will try to get that to you. All right, so again, they have a synthetic loss. They do have short call income, but it comes to 2 cents a share. So obviously, you don't want to hear my estimate for that. You can see it. I won't even say it. It's embarrassing. So we'll focus on the IV estimate, 46%. Okay, 46%. And what does that produce? 52 cents. So that's half of what we're used to from the previous months. But, that's what you should expect, to be honest, for TSLY. And for the people driving, I'm sorry, I'll say what the estimate comes to. It comes to 3 cents, which is a 3% yield. Yeah, you don't want to hear that for sure. All right, so here's the holdings. Again, I got TSLY at the top, TSLY Holdings, nice little there. Again, it's not a freeze pain, but I don't know if we should. Maybe we should. All right, well, either way, we got the synthetic put, synthetic call, pink and orange, weeklies, and blue already costing a lot of money. So we're not in a good position for next week. We may have to talk about this number here, this 3.7 mil. If Tesla goes up next week, then this synthetic bailout money, is gonna matter, right? We can see how much we can make. Obviously, we can escape and pay out our asses on the weeklies, but our synthetics will bail us out, and we know that. All right, I almost said it. Total net assets, 703 mil. The NAV is 1374, and the trade price is 1374. So that's it. That's the update for all 4 funds. Yeah, I got nothing to show. Obviously, it's pointless to show the aftermarket hour movement. There is no pre-market hours. Today's Saturday, so that's why I never show that. So for this weekend, what do I plan on producing video-wise? Obviously, the YieldMax estimates. People are awaiting that, and I understand that, so I will try to work on that. Today, as always, I launched the options video. People keep asking me, can you share, certain things on options? And every Saturday I share it. I share how I make my options money, because I do, a lot of the money that is in my account, my taxable brokerage, I use that to do my own options. Obviously, there's, a lot in YieldMax, there's a lot in Defiance, and of course, Round Hill, and some others. But I do like to trade options myself, because I do think I could do a better job on an annualized basis. I just don't have enough time to trust myself to use, too much money to do that. That's why I use a portion. In fact, I really just use the margin at this point, because it is interest-free when it's in the sell put on hold position. And I can explain that in the later video on options. Obviously, I'll do a Defiance update on the Sunday, and I will do a monthly account update to see where I stand, how much I made in distributions, how much I made in options income, how much I made in income overall, and how that compares to my goals. So stay tuned for that. All right, enough of that. As always, this is not financial advice. I am not a financial advisor. This video is for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, we will try again on the Tuesday recap. I almost said Monday recap, but it'll be a Tuesday recap. So, but yeah, let me know what you guys think of the moves. Obviously, a lot of these, they won their weekly calls because the market has, overall been down. But, they haven't, they lost, a lot of these funds lost so much money early on in the month, it wasn't even enough to catch up. So, and they didn't have synthetic bailout money, locked up. So not a great month, the month of August, to be honest, for any of these, really. I don't know how good the other funds did. I'll take a look at how their stock price or their ETF price did from ex-dividend date when I make my estimate. But hopefully overall we get some good payments in, because as you know, if all the funds pay good, then YieldMax will pay good as well. So, it matters in many different ways. But at the same time, you don't want them to pay too much, because then they'll be digging deep into the NAV, right? Which, we'll pay for that later, because obviously with a lower NAV, there's less funds to play around with and make more money in the future. All right, guys. Obviously, yesterday's keyword was snip, snip. Today's keyword is ice. And most of you know what I mean. I'm not going to say ice what. But today's keyword, if you made it this far in the video, it's just ice, or ice pack, or ice every 30 minutes, or ice. But anyway, thank you for watching. If you enjoy this content, please hit the like button. If you have any questions or concerns, leave them in the comments below. Hopefully, by the time I do my next video, I don't have a groggy voice as much. But again, thank you for watching, and I hope everyone has a great weekend. I will talk to you later.